When we talk about the search tool, the search is available in every strategy. So I'd have to decide which strategy I want to look at first, whether I want to research covered calls, naked puts, bull put credit spreads, bear call credit spreads, collars, or just buying calls and buying puts. When you first log on to your account, if you don't see a strategy available in the upper tabs that you're interested in, simply click the Other Strategies tab, and that will take you directly to the configuration page where you can customize which strategies are available on your tab menu. Now, before we go any further, I just want to launch a quick poll here. We're only going to have 2 polls today, and I'll do them back to back. Well, the first poll I want to know is, what option strategies are you currently trading or researching right now? Are you mainly looking at covered calls or naked puts? They are sort of parity trades of one another. Are you looking at protective strategies, married put positions, or standard collars? Are you looking at the vertical spreads, bear call credit, bull put credit, or perhaps the debit spreads as well, or maybe even iron condors? Are you just focusing on buying options, buying calls, buying puts, or maybe doing long straddles or long strangles? Or you're doing more of the time spreads, the calendar spreads, the horizontal or diagonal? And of course, if you're trading a strategy right now that you don't see available on the poll, you can just go ahead and send that to me in the question pod as well. Jim says he does all of them. All right, Jim, fantastic. Okay. All right. I'm just going to jot something down here real quick. Looks like about 60% of you have voted. We've had the poll open for about a minute. I'm going to leave it open for about another 20 seconds or so. So if you haven't voted yet, I encourage you to do so. We do have a clear winner, of course, which I expected. All right, so let's leave this poll open for about another 10 seconds or so, and we'll go ahead and close that down. Okay. SG says, naked puts on stocks I'm willing to own. Fantastic. I suggest to all of our trial members and subscribers when I'm on a coaching session or a webinar that in general, I don't think investors should do cash-secured naked puts, or especially leverage naked puts if they're using margin, just because they see a promising premium on a more volatile stock. You should only sell a naked put on a stock that you would not mind owning long term. All right, well, let's go ahead and close that poll and share the results. 20% of you are doing covered calls and naked puts. 13% of you are doing the protective option strategies. 47% of you are doing the credit spreads, debit spreads, and iron condors. That's the winner today. 13% of you, of course, are buying options, and 7% are doing the calendar spreads as well. All right, so let's go ahead and hide that. I'm going to follow it up with a real quick poll here just for my own curiosity. What I'd like to know is, what do you feel is the most important criteria for any options trade, regardless of the strategy that you entered? Do you think it's the underlying stock, the implied volatility or various Greek positions, probability above or below, which does incorporate some of the Greeks as well, but we kept that as a separate one, option with the highest premium or lowest cost if you're selling or buying, or the at-risk to reward ratio, the potential risk-reward ratio? All right. Of course, there may be other factors that you consider the most important, and that's okay too. All right, so about 70% of you have voted. We'll leave the poll open for another 5 seconds or so, 10 seconds. All right, and Jim says he uses all of them, and that's sort of the point of this poll that we'll get to when we get into the search tools, Jim. I understand that, and I use most of them as well, except for 2 of them, in a sense. And I'll talk about that in a little bit. I rarely concern myself with the option with the highest premium or what the market considers as the highest premium or lowest cost, and honestly, I never really pay attention too much to implied volatility or the various Greeks unless it's a specific strategy such as calendar spreads, but that's personal preference. All right, let's go ahead and close that poll, folks, and we'll just share the results with everyone. So most of you are focused, as where I think you would be, and I am too, with the at-risk reward ratio. 27% good, underlying technicals and fundamentals. The idea there being, of course, if the stock isn't going in our desired direction, doesn't matter what strategy we choose. If we pick a bullish strategy on a bearish stock, we're going to lose money. So that is important. The probability, of course, helps us get our determination of range out of the money, and 13% are doing implied volatility. And no one's really concerned with the highest premium or lowest cost market expectations, although I know some of us do use that. All right, let's go ahead and hide that, and let's get back to the main screen here. So we were on our configuration page, and what we want to do now is customize this for what we wanted to see. And of course, the winner today was 47% of you were doing vertical spreads. So let's go ahead and move bear call credit and bull put credit up to the top of our list. There we go. And then we had 13% doing buying options. And you notice here we don't have long calls added. So for now I'm going to remove just iron condor, but we can add that back in. And let me go ahead and add in long calls. And also go ahead and add in long strangles for right now, a combination of buying a call and put. Let's move those up there just to customize the view. And then lastly, of course, we had 13% doing the protected option strategies. We'll move married put up as well. And we already have covered call and naked put there also. And let's just remove the custom spread for the time being. We can go back to that, and we'll add in calendar calls for the time being. Oops. Oh, I'm sorry, selected covered call. That's not what I meant to do. There we go. All right, so now we've got our tabs configured, and of course we can add in others later on. Now, let's just take, for example, the bull put credit. We're bullish on the market. We're going to sell a put slightly out of the money for the better probability, and then we're going to buy a secondary put at a lower strike price. This results in a net credit, leverage position. If the stock stays above our short put strike price, both options will expire worthless, and we will keep the net credit. Our risk, of course, is if the stock falls below both strike prices, we'll take the maximum risk on the position. And if you're looking for a high probability spread trade, which most of us will do, we may end up with a 9-to-1 or a 10-to-1 risk-reward ratio. All right, so let's go ahead and jump into the search. But before I do that, I wanted to mention that in every strategy, you go to the main strategy page, you'll have the availability to search where you can customize your own criteria. But if you're not sure maybe where you want to start off in any strategy, you'll always see a link for sample searches. These are themed searches that Ernie and I have put together for you to use as a stepping stone to create your own personal search. There is also a list of default searches in the main search, but if you're not sure yet what kind of strategies you want to do, we can go into sample searches. For bull put credits, we just see 3 searches. The first one is ETFs bull put search, looking for bull put spreads on ETFs to provide diversification, relatively short time frame, minimum 4% return, and sorted by the highest probability. If that's something that piques your investing style, we could just click on the ETF bull put search and see the results of that default criteria, and then you'd still be able to make adjustments. The 5-star bull put search, stocks that are rated 5-star rating, by Standard & Poor's, again, at least 4% out of the money. This one's sorted by the highest returns. And then the safety first one, looking at large cap stocks, which might give you a lower net credit, a lower return, but are probably more stable stocks that might have more success on a credit spread or a debit spread as well. Now, we can also go directly into the search tool. And whenever you open any search, you'll see a listing of trades that match your default criteria, whether it's the PowerOptions default or the last search you were viewing on the screen. Whenever you open a search, the first thing you want to do is not get caught up with the numbers, not get caught up on the stocks that you see. When I open this bull put credit spread search here, I may say to myself, oh, hey, this looks pretty good. I see stocks that I like, such as Tesla, Netflix, ConocoPhillips. These all look like common name stocks that might be bullish on. But before you get caught up in the numbers, the potential return, the probability, and other things that are shown, you always want to scroll below the listed trades. We want to jump right into the parameter field. In the parameter field, you have the ability to set criteria in 4 different categories: basic options criteria, the stock technicals, the stock fundamentals, and we can choose specific stock lists or even sectors and industries for our screening criteria. When we first opened up the screen, we see that our default here is weekly bull puts. We can toggle between other default searches through the drop-down menu here, such as the PowerOptions initial value screen, bull put number 1, and I of course have created other default searches during webinars here for bull put spreads and for credit spreads and so forth. And you can create as many searches as you want. But what we want to focus on first is the information here on the right-hand side. This doesn't show us all of the available filters, but it does show us what are our active filters that are being used for this particular default search. And we can see for the options criteria, we're looking for all months to expiration, and we're looking at the days to expiration between 8 and 17 days. Now, I want to pause there for a moment. In every strategy where you're generating premium, credit spreads, covered calls, naked puts, iron condors, even short straddles, short strangles, you'll have a default for the weekly screens. And a lot of investors, when they first jump into the credit spreads, they say, okay, well, you're looking for all months to expiration, and you're limiting your days to 8 to 17. But what about the 3-day out options, the 4-day out options? We're at Wednesday, so we know we have weekly options that are expiring tomorrow. Why aren't we looking on this default weekly bull put search for options that expire in the next 2 days or the next 3 days? And as you can see, and this is the case for most of the weekly positions, what we've done here is done historical tests with these default criteria going back in time, back to about 2006. And we found that once the weeklies were available for now up towards about the 450 stocks and ETFs and indexes that offer weekly option, is that historically the improved returns exist when you go 1 to 2 weeks out in time, actually not looking at the shorter term options that are 2 to 3 days out. The reason why is if I ran a weekly search on Monday, looking for the options that expire on Friday, let's say 5 days out in time, the losses that you may experience, even if I'm looking for an 80 or 90% probability, I'm still going to have 10 to 15% losers even with my management techniques in place for a credit spread position. But even with that in place, the losses come compounded because with the shorter term options, you're looking at a much lower net credit, maybe only 5 or 10 cents for a 5-day trade. Still might give you a 7%, 5% yield for a 5-day trade, which looks fantastic as an annualized return. But as you start to take the losses and you start to manage the positions, your overall annualized return will be much lower than if you went 2 weeks out. Okay? So that's why when you see those, when you first pull up a weekly search, we're usually looking at least 7 to 10 days out in time or more to look for that longer term. But again, this tool is designed for you to put in specifically what you wanted to see. If I am in a weekly screen and I see that there's 8 to 17 days restriction in the days to expiration, but I want to look 1 to 2 days out, it's perfectly fine. I'll change my days to expiration from 0 to, let's say, 3 days out in time. And I can hit Submit Search and readjust the criteria and readjust, the results that appear at the top of the screen. So you can customize this any way you want to. But let's go back to our discussion on what's available. We see here we're looking for a minimum net credit of 15 cents for a weekly option. We want to be at least 3% out of the money. Look for a probability of at least 70% or more, and just some real basic volume and open interest. In our stock technicals, we do have about 20 criteria that you can use in the technicals field. But for this default search, we've only used that we want to see a stock trading above the 20-day moving average and stocks where the MACD has crossed over the signal line for at least 3 days. We're looking for stocks in an uptrend. Of course, anytime I'm doing a credit spread, covered call, cash secured naked put, I want to avoid stocks that have an earnings between now and expiration because I don't want to get caught with that large loss if the stock moves against me for an unexpected event. And in this particular case, we're just excluding the indexes and ETFs. All right, well, let's go ahead and clear out those drawings and let's review what's available in each individual section. So for the credit spreads, and in any strategy, you'll have the same 4 criteria. Okay, the same 4 categories, I should say, that you can screen by. But what's going to change slightly between each strategy is what's available in the options. For example, you're always going to see your days to expiration and expiration time frame that you can select. You'll always see an implied volatility field, and you'll always see a risk return field. However, if I'm in the covered call category, I'd see criteria that I can use in the risk return field for things such as downside protection, percent return if unchanged, annualized return as well, and also the percent return if assigned. Those categories don't apply to a credit spread where we just see the net credit, the maximum monetary risk, the percentage return, of course, can still be calculated, and then the annualized return as well. We can select our ranges in or out of the money for any given strategy, of course, and if you have multiple option legs such as calendar spreads, you can be able to select the range in or out of the money for the near-term option that you're selling, and of course the far-term option that you're buying. In the price and strike price category of the options tab, we can set an option bid. The Black-Scholes ratios, I'll talk about that in a little bit. You'll be able to filter by the bid-ask spread. Okay, so the short option, the long option, if you want to limit a bid-ask spread to only, let's say, 20 cents or 30 cents, and you can also do it by percentage of the option premium. Deltas and other Greeks you'll be able to filter by as well, in addition to the probability we already talked about. All right, and last but not least, liquidity. Volume today, previous option volume, current option volume, and open interest. Now, before we go into the stock technicals and stock fundamentals, let's talk about a basic bull put screen and what I might put in for the option criteria. Everyone's going to have a little bit different way of doing it. Many of you might be doing the weekly series. If I'm looking at weekly options for a bull put credit spread, but I just want to see anything that's less than 21 days out in time, as we mentioned before, I might just change my days to expiration, so let's say 0 to 25. You always want to leave the expiration time frame really at all months when you're doing weeklies. It's just because the way the exchanges flag what is called a weekly option. The standard expiration, for example, that occurred last week for March on the third Friday is flagged as a standard expiration. So if I just looked at all weeklies and I ran a search 2 weeks ago, I wouldn't see any of the standard March expiration, even though it was only a week away from my search. We want to keep that open to all months. And of course, you just want to do a standard expiration. That's very easy to do as well. We'll just filter that out. We can look at standard April or May, or we could go to all leaps or different leaps as well. That's more important for doing calendar spreads or maybe married put positions. All right, so let's keep our range here of 0 to, let's say, 25 days where we started. I'm not going to talk about implied volatility right now. Let me go ahead and do that again. 0 to 25, my apologies. You always want to start off by clicking the Clear Filters button when you're creating a search from scratch. The net credit and the percentage return is personal preference, but let's say that our minimum requirement is 25 cents net credit. We want at least a 5% yield, whether it's a shorter term trade or even out to 21 days. Putting in the restriction of percent return of 5% to blank or greater than 5% simply means that we have a minimum. Jim says days was 8 to 17. That's right. That was the default criteria, 8 to 17. I'm just showing the flexibility of opening this up a little bit more. I'm not going to give really trading advice of what to put in here. I'm just showing an example of the customization. Now, when looking for a bull put or a bear call credit spread, of course we have the same criteria in a bear call credit spread, we typically want to start a certain range out of the money to help us with a better probability of success. That way, if the stock falls a little bit, we still might be out of the money, but if it stabilizes or moves up, we have a safer trade. And as we mentioned, most investors will probably look for a probability on a credit spread of at least 75% or higher. So you don't necessarily have to use the range out of the money when doing a credit spread or the range in the money when you're doing a debit spread. If I adjusted my probability to be greater than 75%, I'm probably starting off being at least 2 or 3% out of the money for the near-term options and probably 5% or more out of the money for the farther term options, 20 to 30 days out in time. Is the option bid important when screening for a credit spread? I personally don't think so. I'm looking more at the minimum net credit between the two options when I'm selling and when I'm buying, but the option bid is there if you do have a minimum requirement for what you'd want the sell option to be. Strike difference. This is what you'll see in the credit and debit spreads. if you have a minimum requirement that you only want to see 5-point spreads or less. As we know, many of the weekly options might offer only dollar strike differences or 50-cent strike differences as well. But if I know I'm going to include options that are maybe 30 or 40 days out in time, standard expiration for example, I may want to set my strike difference to be anything that's less than or equal to, for example, 5 points. So I'd be able to see the 1-point spreads, the 2-point spreads, the 250 spreads, and the 5-point spreads if they match my personal criteria. Now, for liquidity, option volume today, as a general rule, what Ernie and I suggest is you probably know a minimum number of contracts that you're looking to trade. In your portfolio, if you're only allocating 15% of your total portfolio to credit spreads, you know on average you may trade 5 to 7 contracts of a spread at any given time, based on your monetary requirement of setting the strike differences. As a general rule, Ernie and I suggest that when you're creating a search, you want to look for an option volume today that's maybe at least 5 times the number of contracts you're planning on trading, and an open interest at least 10 times as a minimum. So we're going to set our option volume today at least 25 contracts traded and an open interest of greater than 50. Now notice that when I'm making these changes over here on the right-hand side in our active filters, all the changes have shown up in red. This is letting me know that I've made changes to the search, but I have yet to submit them. Once I submit them, they'll convert back over to a black color there, letting me know that we've submitted that criteria. But at any time, I can check my active filters here to see what has been changed, what I have changed personally, but has not been submitted in the screen. All right, we're going to leave that alone for right now, but we'll come back to it. Let's go into the stock technicals. The stock technicals field will appear the same for every strategy. You'll have the same criteria available. Screened by beta, of course, it's percent of 52-week range, the percent stock volume, the average stock volume, the historical volatility of the stock. If I'm looking for a neutral to bullish position or neutral to bearish position, I may want to look for a lower volatility range so I don't see a stock that's fluctuating wildly, which would cause great losses in any credit spread. Broker recommendation, an RSI, and if of course you use Bollinger Bands, you can set the percent Bollinger Band range, the percent bandwidth. We'll talk about that a little bit later. And the simple moving average, if I'm just looking for a basic neutral to bullish position, I probably want to look for stock prices that are trading above the 20 or 50-day moving average. In this case, since I set my time frame to be 0 to 25 days, I'm probably going to use stocks that are above the SMA 20 as well. Okay, all right. Now you also have the historical moving trends, the days that the stock has been above the 20-day moving average, number of days stocks up and down, and of course the MACD signal as well. And let's go into the fundamentals here. Well, one other thing I might add in the technicals, since I'm looking at a neutral to bullish position, I may want to look for stocks that have good liquidity, stocks that are, trade at least 700,000 shares per day on average over the last 90 days. For every criteria that's available, you can hover over the specific text link, and this will show you the basic definition of the criteria, but in this case, we see that the daily volume for the underlying position is measured in thousands. So if I only want to see stocks that average 750,000 shares per day, I'm just going to plug in average stock volume greater than 750. All right, now let's go into the fundamentals as well. Here we see things such as the stock price, the stock change today, earnings per share growth, price earnings, shares outstanding as well, percent dividend yield, maybe not important for this particular strategy, but we might be interested in that for covered calls, collars, married puts as well, market cap, other ratios such as price to book, price to sales, and then of course the earnings date filters and the ex-dividend date. We can choose specifically to screen for an earnings date between now and expiration and not between now and expiration as well. Well, we're not going to worry about stock price because we've already set our risk limitation for the spreads to be less than 5 points. So if the stock's a $100 stock or a $1,000 stock and we can still get a 5-point spread that matches our criteria, it doesn't really matter to us. But again, if you did have that restriction, say you were doing a covered call search or a married put screen, and you know that your cost basis based on your portfolio size, you're only looking for stocks between $5 and $150 per share, you just plug that into the field as well. Or even if you want to look higher stocks, maybe 80 to 200, plug in your specific requirements. Now for a neutral to bullish position, I may start off looking for stocks that match some basic criteria for management. And what Ernie and I feel is that if I'm looking for a stock that I want to show has reflected good management and has been growing, I may put in a minimum earnings per share growth of at least 5%. I may want to keep a standard PE ratio of, let's say, 0 to 50 or 0 to 70 as well. Let's put in 0 to 70, so a relative PE ratio. And again, another one, if I just wanted to look, for example, for mid to large cap stocks for my neutral to bullish positions, we could use the market cap here. Once again, as we hover over, we see that this is measured in millions. What's considered a mid-cap stock is greater than $2 billion or more, so our filter would be greater than 2,000. So let me go ahead and plug that in. Right? And again, with any income strategy, covered calls, naked puts, credit spreads, strangles, short strangles, I want to put in an earnings date not between now and expiration. Okay, now, what have we just done? Well, we've just reviewed some basic criteria that we'd look for a bullish strategy. We want to see stock in an uptrend, has good liquidity, has shown good management, and we're avoiding earnings between now and expiration. At the same time, we put in some basic option criteria that we might consider. Sure, I want to have a good probability of maybe 75%. We could increase that. Wanted to see good liquidity on the options as well, and a minimum net credit and a short time frame. This is a very basic search. But let's go ahead and submit those results and see what we get. So even with that basic criteria for credit spreads for a bull put, minimum return of 5%, minimum credit of 25 cents, keeping our strike differences to be 5 points or less, looking for stocks in an uptrend, and with liquidity, we've narrowed down the entire universe of options. And every 15 minutes or so, we're building close to 1.4 million bull put credit spreads and about 1.4 million bear call credit spreads. We've narrowed down the entire universe of options to only 11 results. This is kind of where you want to be. Whenever you create your own search, or you start off with a default search and make some basic adjustments that match your requirements, you want to have a list of trades maybe under 2 dozen or so. Right? If I do too open of a search and I have 400 results, it's going to take you forever to try to decide which option you should trade, which spread you should trade. You want to keep tweaking the criteria to get a nice, manageable list on the position. All right, now, that's just the basic functionality of the search. We're not going to talk about researching and analyzing the positions today to choose which spread you might use. We want to talk about some other basic concepts as well. So here we are in the credit spreads. We've set our basic criteria, but let's say I'm more of an SPY trader, or I just like to trade the broad-based ETFs with bull puts or bear calls, and whether I'm using standard expiration or weeklies, I can set up different searches as well. Side note here real quick, once I've run these results, if I decided this is a nice manageable list, and notice because of our time frame, we have securities that are 23 days out, 16 days out, 9 days out, and even, as we mentioned, some positions that are 1 day out on Google and Boeing as well. So these match our criteria for a one-day trade and still have the minimum 25 cent net credit and at least the 75% probability we were looking for. But let's say we just wanted to do some standard ETFs. Well, once again, if I have any specific search criteria already in mind, I want to start off by clearing the filters. I want to empty everything out of my search results, and then we want to just set the basics in. So the first thing I do, if I wanted to screen for ETFs and any strategies, we'll just go to the lists. The lists field allow you to screen against a specific sector or industry, or you can exclude a specific sector or industry. We also have a variety of stock lists you can use in any strategy. If you create a watch list on the main page of the stocks you're tracking, you can screen specifically against those. We also have other things that you can screen against, such as the Dow 30 Industrials, stocks with earnings coming up this week, something I do maybe for a long straddle or a long strangle, or maybe option buying. The Investors Business Daily 50 or canceling list, inverse ETFs, the S&P 100, S&P 5 stars, NASDAQ 100, as well as certain value line lists as well. You can also look specifically for stocks offering weekly options. In addition to creating that search, you can also choose to exclude certain functions. If I wanted to exclude, for example, inverse ETFs or leverage ETFs, I could choose to do that as well. So to start off, what do we want to do? Well, we know that we want to look specifically for ETFs. So I'm going to select to view indexes and ETFs. We're just going to include that as our personal stock list. But I may want to exclude things such as the 2 times ETFs, the 3 times ETFs, or I'm doing bull put spread, so I probably want to remove everything that is a counter market ETF as well that'll move down as the markets move up. Now the exclude function or the include function allows you to just select one listing at a time. So I could select inverse ETFs and remove those from our results, or leveraged ETFs. But in this case, what I like to do is combine those 2 lists. And I've already done that, but let's walk through the process. In addition to selecting a certain stock list or excluding a stock list or sector industry, you can create your own personal stock list. So we'll click on Create and Modify Stock Lists, and this field will come up and it'll show us the available lists that we've created. I can create a new list and just paste symbols into the field to scan against my own list, or I can choose to combine lists out of the available selections. So when I click on Combine Lists, I might call this ETFs to remove from standard searches. And I can put in a description if I want, but that's not important. But here's the listing of all of the default stock lists and my own personal stock lists that I've created. So what I can do here is select in my combine list that I want to include both inverse and leveraged ETFs. Let's go ahead and click Create. And now we see, of course, we have the 2 lists already there. The ETFs to remove from standard searches and the one I created earlier. But the one we created today is the ETFs to remove from standard searches. Let's go ahead and close the window. Oh, sorry. It's got to refresh our data for us. All right, we'll go back to the lists. We've already included indexes and ETFs, but now we're going to select to remove those ETFs, the leveraged ones and the inverse ones from our selected searches. That's a very specific criteria, so now we just need to go into the options and decide what do we want to do. Well, let's say we wanted to go further out in time on this one. We're going to go to standard April expiration, which is 23 days away. I don't have to put in a time frame because I've just selected that as well. We'll keep some of our basic criteria. Okay, what is our requirements for a bull put credit spread? Since we're going 23 days out, let's increase this and say we want at least a 30% net credit. We want to have a 75% probability or higher, and just basic, we know that we want to keep our strike differences to be less than or equal to 5, and let's put in some liquidity. Option volume today, let's say again, at least 25 contracts, open interest at least 50. I don't want to plug in anything else right now because I have a very specific search. Let's see if we get any results from this. Okay, so once again, I've narrowed this down to a nice, manageable list of only 13 results with just a few basic criteria. We isolated it to only look at the standard indexes and ETFs. We removed all of the inverse and all of the leveraged ETFs as well. And then we included our basic criteria for our minimum net credit, strike difference, some liquidity, and the probability. We now have 13 results. Looks like we have 4 different positions on SPY. QQQ is in there as we'd expect, IBB, and of course the Russell 2000 index came up as well. And GLD and EWZ are in there also. So now we have the spreads that match our minimum return requirement, have the return percentage that we'd want as well, and have the probability that we want also. So if you have a specific criteria that you want to use for, let's say, ETFs, or let's say dividend-paying stocks, What I encourage you to do is clear the filters first, put in your basic requirements that you'd have for your stock selection, and then also for your options criteria as well. Keep it simple to start. Now, if I ran this search and I had 87 total results, well, what I'd probably do now is start increasing some of the criteria I used. If I was happy with a minimum of a 30-cent net credit and a 75% probability, with that many results, I might up this to a 40-cent net credit and maybe an 80% probability to get it down to a nice, manageable list as well. All right, Mark sent in a question. I think he missed it earlier, and that's quite all right. He might have came in late, and he asked, I hope this is being recorded. Yes, it is. I'm not going to break away from the search right now, but at the end of the presentation, I'll show you where this presentation will be archived and available for you to view later on. Okay, so that's just some of the basic criteria. Now, I'm going to go over now to our second place one, covered calls and naked puts. We're going to take a look at that screen, and we'll see that's very similar. We're going to talk about other specific searches, and I'm also going to use that screen to illustrate the concepts we haven't talked about yet, such as the implied volatility and the Black-Scholes ratio. A question came in, Mike, you had mentioned that if I had other specific criteria, other than searching for dividends and ETFs, what would you consider specific criteria? It's a great question. And we're going to use that here with the covered call screen. So let me go to covered calls, and let's just go into search. As we saw with the bull put credit spreads, once I click on search, a listing of default trades are going to appear on the screen that match whatever criteria I last viewed or the PowerOptions default criteria. You see here we have things for covered calls such as brokered, advisor recommended, in the money and out of the money, stock price momentum, the weekly covered call screen, and we've created other ones as well, high IV, more info screen. Those were all done during different webinars. As before, we can see immediately what criteria were used for this default search over in our active filters menu. And we see that this particular default search is sorted by the % if unchanged. You can change the sort criteria in any search at any time. Any criteria that's available for the options, the stock technicals, or stock fundamentals is available in your screen. So if you wanted to sort by earnings per share growth, or if you wanted to sort by option volume, for example, you can change that at any time. All right, so going back one more step to the question came in, what are considered specific criteria? I had a customer, PowerOptions customer, call in on Monday, and he wanted to know how to set up a covered call screen to look specifically for stocks that paid at least an 8% dividend or more and offered at least a 2% minimum covered call return for a 30-day time frame. Okay, so that is a specific requirement, and it's very simple to do once again. So what I would do is click Clear Filters. I'm going to empty everything out for this particular screen. We'll go over to the Stock Fundamentals, and we'll start off with the basic requirement. We wanted a dividend of at least 8% or more. Again, this is what I consider a specific search, so I'm not going to mess around right now with earnings per share growth, price to earnings, market cap, dividend yield, earnings date, but I may consider the ex-dividend date if I wanted it to be within the options expiration. So I want to make sure I was in the stock before the ex-dividend date, so I might select the ex-dividend date to be between now and expiration. What were the customer's other requirements? Well, dividend yield. You may want to take advantage to look for the positions that have the ex-dividend date between now and expiration. We wanted at least a minimum 2% return if assigned. As we talked before, in the returns field, we have the same subcategories in the options tab that we saw in the bull put credits. Time frame, implied volatility, returns, in or out of the money, price and strike price, and liquidity as well. But the return field, we noticed some different criteria that apply to the covered call, which don't apply to our bull put or bear call credit spread. The downside protection, essentially what is the option premium I'm collecting for the covered call divided by the stock price. Really what it defines is how far can the stock drop before you're losing money on your covered call position. The % if unchanged, if the stock stays exactly at the same price, what is your time value yield or your % yield? And then of course the % if assigned, if the stock's called away at expiration. So again, if the customer's requirements was he want to be at least 30 days out. We could look to April. It's a little bit shy of that. Or we could go directly to May, which is 60 days out in time roughly. Or again, we could just create our criteria where we're looking for a minimum of all months to expiration, and I want to be at least 30 to, let's say, 45 days out in time. Now, this is an interesting concept that I had to discuss with the customer. I already saw that the standard expiration for April and for May were 23 to 58 days out in time. If I force a days to expiration now to be between 30 to 45 days, I'm taking out all possibilities of the standard expiration, and I haven't gone far enough out to include all the standard May expiration. In fact, all I'm going to see here are weekly options on the third or fourth week out in time. That's already limited my universe of options to only about 450 potential stocks or indexes. So I'm going to want to increase this. I'm going to let it go to 20 to 60. So now I've already seen the days remaining. I'm going to include April and May standard expirations as well as any weeklies between. So our requirements were an 8% dividend yield, an ex-dividend date between now and the expiration, so we'll make sure we're in the stock for the ex-dividend date, minimum return of 2%, and let's just put in some basic criteria again for the liquidity. 10 option volume today and at least a 25 open interest. Now, one more factor comes into play. When you're looking at covered call positions, maybe cash secured naked puts, long callers, married puts, anything that you're buying the stock, the underlying, and that is the stock price. I know my portfolio size, I don't know yours, but in general when I'm doing collars or married put positions or maybe a cash secured naked put to get into a stock as we talked about before, or the question that came in, is that I know my range has to be between, in the fundamentals field, about $5 to maybe $85 per share. As it turns out, the customer I was talking to, his other requirement was he wanted to be at least in $20 stocks, and he could go up to about 150 or 175. So that's a requirement that we want to take into consideration. Why? Well, if I left that blank and I ran a search and a $600 stock came up that had a 2% yield, was in our time frame, and offered an 8% dividend, well, I'm not going to trade that because it's out of the range. Why do I want to waste my time seeing a result that I'm not going to trade? Okay, so we want to make sure that we put that in. Now again, this is a specific search because our main focus is on the stock paying an 8% dividend and of course the 2% yield. We just added some extra criteria for the days to expiration. Are we going to get any results? Let's find out. Let's go ahead and submit the search. And we got 1. On Monday we got 2. We had a little bit different time frame in there. And this is probably because we selected the ex-dividend date. So here we are with CSAL trading at 21.44. The out of the money May 22.5 call is selling for 40 cents. This would potentially give us a percent if assigned of 6.9% and a return if unchanged of 1.9. And of course, we're looking for the stock that paid an 8% dividend and had an ex-dividend date between now and expiration. All right, so this one matched the results. This is a very specific search. If I wanted to open this up more, I may lower down the volume in an open interest. Let's just try that. Let's put this to be at least greater than 0 to see some volume. Oops, and an open interest of at least 10. Is that going to get anything more into our results? Probably not. I could lower the return if assigned, but we needed to keep the dividend as well. All right, now, 2 things we want to bring up. When you're doing a specific search, there's something in your criteria that you really wanted to apply to your strategy. When you first pull up the results, there's some things that are missing, aren't there? I don't see the dividend yield. I don't see the ex-dividend date. I can research this stock quickly and see that, but why bother? If there's something that I'm using in a particular search, I want to make sure I have it in my columns. So we'll go ahead and go to the Choose Columns field. And what we can do now is select what we wanted to view. So I want to see the percent dividend yield for our stock-related columns. And then further down the line, I want to look at the ex-dividend date also. And you could select earnings date, any of the other criteria you can use in the search. And for the option, of course, you could select different things for the implied volatility, percentage time value, or the different Greeks also. I'm going to leave that alone and go ahead and submit and save the search. Now we know we're still going to have only the one result, but now we see that this stock offers an 11% dividend yield, and the next ex-dividend date is on 3/29/2016, so it's about 6 days away. Now this is not a recommendation or suggestion. You still want to do further research and analysis on this stock to make sure it matches your requirements as far as going forward for a bullish stock in a covered call position and other criteria that you may want to use as well. All right, a common practice. Dimitri says, is your dividend of 8% too high? Yes and no. This was the customer's requirement. I just wanted to show how we would do it. Could I open up the search more by lowering that restriction? Absolutely. We could go into fundamentals, and I could change this to be greater than 5%. And Dimitri, to be honest, another factor that's probably hindering the search results is the requirement we made to try to make sure we're in the stock before the ex-dividend date. Some of the dividend dates might be further out in time beyond the May expiration if they've already released a dividend within the past 15 to 20 days. So we'd have to wait another 90 days or so, or about 70 days, to get that dividend. But you're absolutely right, Dimitri. That is a great point. If I run a search that I wanted to see, and I only have one result, or you may commonly see something that I'm going to show next that might say there are no stock options that match your criteria, please consider adjusting your criteria, that means that you know that you're going to want to lower some of the restrictions you have to get more results for better selection. So let's do that. Let's lower our dividend requirement down to 5%. We'll keep the ex-dividend date selected between now and our expiration time frame. Let's run the search, and it's still there. So just one more time, I'm going to go with fundamentals. We'll take the ex-dividend date out for the time being, leave the dividend at 5%, and now we have 264 results, which is, again, as I mentioned, way too high of a number of results. It's going to take me forever to research and analyze these positions. Also, I see that, oops, we've got some inverse ETFs that came up on our screen and some 2 or 3 times ETFs. So once again, I may go to the list to exclude that combined list we just created for the inverse ETFs and the leveraged ETFs, which only takes us down to 257. But now we can start going through and put in more of our requirements. We created a basic search initially, which only resulted in one criteria. We tried to open it up a little bit more, and it turns out we opened it up too much. So now, how can I restrict this? Well, I wanted to look for an 8% dividend, but now I'm looking for at least a 5% dividend. Okay, well, if I'm happy with a 5% and I really wanted 8, now that we've opened this up more by removing the ex-dividend date between now and expiration, maybe I can go up to 6% or 7%. Let's go mid-range, go 6.5. And this takes us down to 163. Now we might start using more of our fundamentals. So we did find dividend stocks. We did find stocks that had the 2% return yield we were looking for. We're in our desired time frame and our stock price range. But now maybe I want to filter this further to just show me what are the stocks that are trading in an uptrend. Okay, so we'll select stock price to be greater than the SMA 50 or the SMA 20. And of course, we may look for stocks that have good liquidity. At least again, 750,000 shares, or may choose to use that mid cap or large cap. Adding in just these 2 filters for an uptrend, we take it down to 131. So in this case now we'd start increasing maybe the liquidity again and so forth as well. Okay. How do you edit the name of a search? Okay, so now that I've created a search criteria, this is for dividend-paying stocks. I want it to be a little bit more restricted here. So, that's okay. Once we've created this, I can just click, now that if I'm comfortable with the results, excuse me, and I want to come back to the PowerOptions Search in the covered call screen, I want to click Save, and I can name my search. So we can just call this we'll just call this high dividend covered call, and I'll put in a description. Dividends, if I can spell, of at least 6.5% and so forth. All right, let's go ahead and save that search. Now, Jim said, how do you edit the name of the search? So I just saved my high dividend covered call. It's selected. I can click Save again, and now I can just edit that name to call it the edited high dividend covered call. And that should replace it in my drop-down. Okay, so let's go ahead and save this search. All right, and now, once you've done that, of course, Jim, you can go through, oh, sorry, folks, you can go through and delete any other existing one. So rename with no change. I'll just pull up that search. Once it's pulled up, if I wanted to remove this, just click delete. Are we sure we want to delete this? Yeah, let me get rid of that search as well. Okay, so that one's gone now, and we can go back to our edited high dividend covered call. All right, so you can delete the saved searches, you can create multiple names, and then you can edit it by just clicking the save function as well. Okay, now, another point we brought up, in all this discussion that I've done, I haven't talked about two important factors. Well, two factors that are called important, but we haven't even looked at yet. And that's just in the options criteria. We have a whole section on implied volatility for the options, and of course even things such as the Black-Scholes ratios to look at overvalued or undervalued options. Both the Black-Scholes ratio, the 50-day, and what's called the SIV, and our IV over HV and IV over SIV, and of course just the standard implied volatility, but are used by investors to identify different positions that the market considers to be overvalued or undervalued. So another common question that I get from time to time is I'll get a new trial member to PowerOptions or a subscriber who read something on the internet or took a class and they said, I'm really interested in only looking for options that are at least 60% overvalued compared to their theoretical worth. I want to look for options with high implied volatility. Okay. Now, again, it's a specific requirement. So how would I run this search? I go up to the top, whatever search I was looking at, and hit clear filters. That empties everything out. I don't want to just look for options with a high implied volatility, say greater than 2. Right? I still have to consider, what am I doing? I'm in a covered call screen, so I still have to set a desired time frame. Let's just go to April for this demonstration. And I'm still going to want some basics for maybe liquidity and maybe even range in or out of the money. And here's a reason why. Let's say that I selected April. I want to see options with an implied volatility of at least 2 or higher, 200% or higher. And I want my implied volatility of my option divided by my historical volatility of my stock to be at least 1.6. What this means is that the implied volatility is 1.6 higher than the historical volatility, which the market might consider to be an overvalued option. Why did I use 1.6? Well, that's because that's the requirement the investor had. What this means is that the implied volatility is 60% higher than the historical volatility. Ratio of 1 would mean that they're even. All right, so we've got our high volatility requirement. We've got our IV-HV ratio. Let's go ahead and click Submit. Now here's the problem. We have too many results. And we have results, some here look within the range. But what you may find is if you're looking for something with a high implied volatility, here's one on Acadia, and there's multiple ones on Acadia, but it's buying the stock at 2060 and selling the April 16 call. Remember, you're still doing a covered call, so whether you want it to be one strike in the money or a little bit out. Here's another one on Sun Edison, buying the stock at 132, selling the April 0.5 strike for 88 cents. Wow. Okay. So, I mean, that's a high volatility, but am I going to trade a stock that's at 132? I mean, I'm going to do my research and analysis, but this stock has probably fallen so much, which it has. I was looking at this yesterday. So the idea here is this is still too much to filter by. I want to include more things into this. Okay. So we know that if it's high implied volatility, we're going to have a high return. So let me put in at least a minimum of 8% return if assigned and at least a 10% downside protection. You're also going to want to see some liquidity. Okay. If you run a basic search looking for something that has a high implied volatility or an extremely high probability, and you end up with a stock that's, let's say, trading at 200, and the out-of-the-money naked put appears with the 50 strike, which has basically no premium, but it has a high implied volatility, and of course, it has maybe a high return based on your price, but it's not logistical that you would sell that option. And it probably doesn't have any open interest or any volume whatsoever. So when you're looking for things that are high premium requirement, high implied volatility or high Black-Scholes ratio, anything along those lines that's specific to the option price, make sure you're putting in some basic liquidity because you may get stuck seeing a lot of options that are so far out of the money or so far in the money they don't make logical sense to trade in the strategy because we didn't put anything in for return or downside protection on our initial screen. All right. Okay, once again, we'll go ahead and submit that. Just that basic requirement of making sure we had a good downside protection, which you'd really want for a more volatile stock, and a reasonable percent if assigned, we took it down to just 12 total results, dominated by things that have been in the news recently and pharmaceuticals, Acadia, Portola, Clovis, and of course Sun Edison, which is so far down in price that the volatility is extremely high. Now again, we don't see the IV-HV ratios here, but we could add that by choosing the columns. Is this a good criteria to use for a covered call, a naked put, or even a credit spread or a debit spread? In my opinion, absolutely not. These options have a high implied volatility for a reason. The pharmaceuticals might have a drug that's in the pipeline that might have a phase 2 or phase 3 FDA trial coming out. The whole market is expecting that, which is why the implied volatility and the return is so high. If the FDA approval comes out and the drug passes, we could see one of these stocks jump up 50 to 60% of their current value. That would be great for the covered call. If the drug fails its phase 2 or phase 3 trial, the stock could drop 80 to 90% of its value before you can do any trading. We've seen that before. We've seen $18 stocks drop down to $1 per share. We've seen trading halted, and then the stock returns trading at $1 per share because of a failure of the FDA approval. Well, that means I still lost about 90%, 95%, even with the high premium. If I got into Acadia now at 2060, we sell the April 20 call, let's say, for 460. Okay? And if a drug fails an FDA approval, that's why this is so high implied volatility, and the stock drops to $1 per share. Okay, well, I hedged my loss. I didn't lose the 2060, but I still lost about $16. And if you overtraded this because of the high potential return and you thought, oh, what could be wrong? They have a 22.3% downside protection. Well, 90% loss is what can go wrong with these more volatile stocks. All right. The illustration here, maybe we should go to the naked puts for this. And what I'm going to do here is just we're going to talk about some basic criteria that I would use. We've already seen most of it. Here's the weekly naked put default. But let me just go to the initial value set, looking for a standard monthly cash secured naked put. And we had the question earlier, mentioned that we only trade naked puts on stocks that we would want to own. We've put in some basic criteria for this default search on a cash secured naked put, selling put to get into the stock. Okay? And so we have our option criteria. We're looking for a minimum yield on our put of 1 to 2%. We want to have protection. We're looking for at least 8% out of the money, 70% probability or higher. We're looking for a strong broker recommendation of less than 2.6. That means it's either a strong buy or a buy recommendation, or between a buy and a hold. Limited the stock price. Any bullish strategy, bull put credits even, covered calls, collars, married puts. I usually look for an earnings per share growth of at least 5% or more. We keep our PE ratio relative, and we're looking, of course, for an earnings that's not between now and expiration, because we don't want any surprises coming up. Now, let me add just a couple more basic filters here. We have 29 results, so I shouldn't really add anything, but it's a nice manageable list already. But I'm going to go into the technicals, and since this is a bullish position, let's look for stock to be above the SMA 50. So we want to see stocks in an uptrend. This should cut it down about 12 results or so. All right, so we've got 18. Now, these 18 naked put positions match what I might be looking for. They're stocks within my personal price range. I wanted to see good management, relative PE ratio. I might add average stock volume, but as I mentioned, I've already got a manageable list. I look for good probability and a good range out of the money, and my minimum requirement, at least 1% naked yield. I could increase that and go to 2 and cut it down to 5 results. Now, the question to be asked that we were talking about earlier is, these are the positions that match my stock requirements for a naked put strategy, my return requirements, and my range out of the money. Let's go into the choose columns. Let's go ahead and explore, are these options considered overvalued or undervalued? So I'll select the IV over HV ratio, and we'll use the Black-Scholes ratio as well. Excuse me, Black-Scholes ratio for the 50-day volatility against the stock for the time being. Let me go ahead and submit that. All right. Now, some of these, for example, are overvalued. Diamond Resources International, 2305. We could sell the 20 put for $1. That's a 5% yield. This is an outlier to the others. How can we tell that? Well, it's probably the only one. It's one of two that are considered to be overvalued by both the Black-Scholes ratio, the theoretical value of the option, the actual trading price of the option, divided by its theoretical worth, and the IV over HV ratio. This is telling me that although it might not have earnings between now and expiration, there is some event that's coming up or some event that just happened or something in the news that is causing this to be more inflated compared to other prices that are near it, other options that are near it. Do I have a different one? Yeah, here's an example. Stock's at 2305, and we're looking at the April 20 put with a $1 premium and a 5% yield. Further down, we see Newmont Mining at 2539. It's about 2 points higher. We could sell the April 23 put for only 32 cents, which is more in line with the yield that we would expect, the average yield of all the returns, where this is our bell curve outlier here at the 5%. Similarly priced, similar range OTM, but a third of the premium. Why? Because something is going on. This is when I'd use that more information button to research the stock, the fluctuations on the stock chart, the company news and information, see why is this one almost look too good to be true, because it usually is. But what I want to illustrate here is what we mentioned before. When I'm doing a cash secured naked put, let's just take Weight Watchers, and I haven't researched or analyzed this position. It's a low price stock at $13.40. We could sell the 12 strike out of the money put for 40 cents. Okay, so it's still a strong yield of 3.3%, but this is telling me that the market thinks this is about 58% undervalued. It's got a Black-Scholes ratio of 0.42. The actual trading price divided by what the option should be worth is at 0.42, and the IV over HV ratio is showing me that the market considers this to be 34% undervalued. Do I care? Not really, personally. And here's the reason why. If this stock matches my fundamental and technical requirements, the option strike matches my range out of the money, the probability I'm looking for, and the yield that I want, and when I do my further research and analysis, I like the stock chart, there's nothing in the news or the profile that would cause me hesitation to enter this position, nothing about an upcoming change in board members, a potential boardroom scandal, a pending patent lawsuit, or anything along those lines. If it matches my goals for my trading plan and the stock matches my criteria, I'm not overly concerned if the market considers it overvalued or undervalued personally. To me, it's not. This matches my trading goals, and I have to make sure that I like the stock as well. So that's just one of the things I want to mention, is that if you do trade specifically looking for higher implied volatility ratios, options that are overvalued for their Black-Scholes ratios, and so forth, then you can do that. But in most cases, I'm not too keen on trading these income-generating strategies there, where the option might be considered overvalued or undervalued. And if there's an option, as we talked about earlier, if I liked Weight Watchers and I wanted to get into the position, I didn't mind owning the stock, and that naked put has the yield that I want, I'm not overly concerned what the market thinks as far as its range to overvalued or undervalued as well. Okay, so we've covered the search criteria basics. We've covered some of the criteria that you might use. And remember, at any time, if you're not sure what a specific criteria means, just hover over that and you'll get the pop-up definition there for that particular criteria and some guidelines or some examples of what my criteria you might enter. We had another question come in asking if this webinar is recorded. Yes, we did record today's presentation. And I want to, since we're already at a little bit 10 minutes after 1 o'clock, I wanted to show everyone here where you can go. So if we go into the Home tab and we go into Free Webinars, this will take you to the Archived Webinars page. Today's presentation is going to be available right here under the PowerOptions Tools tab. The first one listed is going to replace the previous Setting Up the Search Tool presentation done on October 7th. Now, we did cover some of the ideas on criteria for vertical spreads. We showed covered calls and naked puts. We didn't get a chance to go into the married puts or for long calls or calendar spreads in the time we had today, but This is what I'm going to show everyone. Some of you might not be on a trial to PowerOptions. We sent out this invite to a large group of people that may or may not be on current trialers. But this is a public page. Our webinars page is a public page. You can just go to www.powerop.com/webinars.asp. I'm going to send that to everyone in the text link. Okay? This is a public page. Why am I showing you this? Okay, so for those of you that were interested in long options, married puts, for example, or even calendar spreads, there are webinars that are available here that you can take advantage of at any time. Here's a whole presentation from last February on searching for covered calls. If you go into the Options Strategies tab, here is the webinar from August on selection criteria for call buying and put buy. It's a full presentation just looking at long calls and long puts. This presentation here, for those of you doing married puts and maybe collars, you can check out the one for power options for radioactive trades. The first 25 minutes or so we'll talk about using the search tool for identifying the married put trades following the radioactive trading techniques. There's one here for the naked puts where we talk about why is a strategy used. Here we go, tips on researching and the stock criteria to look for. Okay, so that one there in the middle of that presentation, we talk about more in depth the criteria to use for cash secured naked puts. And then here, the vertical spread and more along the lines of a vertical spread's hands-on look. These two presentations will help you with that criteria for bear call credits and bull put credits as well. In the requested topics, you'll see other presentations. These are from our Friday afternoon open discussion presentations. But you'll see a lot of things here where you can, let's see, let me look for a good one. Strike prices on spreads and covered call management. Oh, here's one, expiring calendar spreads. So those of you doing calendar spreads, you might find the one from October 16th. Interesting there. I'm trying to look for one that just says the search. Here's ways of management techniques and beyond. Okay, so for those of you doing calendar spreads, you could look at this potential presentation, and I believe there's another one in here as well that discusses the calendar spread. So you've got a variety of different webinars that you can view. And of course, going further on, if you wanted to start looking at the ways that we discuss for researching and analyzing a new position or tracking and managing your position with a portfolio, you'll find that under the Power Options Tools tab as well. Okay, so once again, we'll archive this presentation today. It'll replace the October 7th Setting Up the Search Tool webinar. It'll be available in the Power Options Tools, and I already sent you the free link there to access that, our webinars page, excuse me. All right, so let's go back now and discuss just a little bit more. Let's review a little bit. Here's basic tips on using the search tool for any strategy. I know we didn't get a chance to visit every strategy, but the same concepts, the same template is there for you. If I open the screen on long calls, for example, and we went into the options tab, we wouldn't see things for percentage return, downside protection, percent return if assigned, because you can't calculate a return with a long call. But you'd still have the ability to put in criteria for the option price, what's called the percent to double, the percent to break even as well. Subtly different categories in the options criteria that are more linked to your specific strategy, but then the technicals, the fundamentals, and the list field will all be the same. All right, so the basic tips on the search tool, whether you're just starting out or you're an experienced options trader, use the default criteria in the searches or the sample searches as a stepping stone. When you first open a new search, remember I encourage you to ignore the listed trades, don't get caught in the numbers, scroll down below the listed trades, see what's available in the active filters, and then start making your adjustments. If you're taking a default search, a sample search, or one of the searches, the default criteria in the search, and you want to make adjustments, do one adjustment at a time. Right? So I had my weekly bull put search. I looked at the active filters, and I decided that I wanted to look for a higher return, a higher probability, and a higher average stock volume. Don't put all three in at once. Do one at a time so you can watch how much each one affects your list. So if I had 80 results to begin on the weekly bull put search, I added all three criteria. Now it shows me that there's no stock or options criteria that match my requirements. I don't know which one it was. So I take the default first, increase my percent return, and hit submit. I take my 80 results down to 65. Okay. Now I increase my probability, hit submit. I take my 65 results down to 35. And now I can say, okay, is that a good manageable list to use, or do I need to filter it further? So just make one adjustment at a time if you're starting off with the default criteria. Do not feel overwhelmed, okay? I know we saw so many things, and we touched on the implied volatility that we didn't talk about to the end, and the Black-Scholes ratio. All those fundamental and technical indicators we could use for MACD, stock over, days over the 20-day moving average, Bollinger Bands. Don't feel overwhelmed. Use the criteria that you know you want to use first for your trading plan and your goals for the strategy, and then learn the others later on through your own research, sending us an email, calling us, or scheduling a coaching session, and we'll walk you through how that setting might be used and how it may affect or enhance your search criteria. Never feel pressured to use every available criteria. If I put something in to every one of those criteria in the searches for the options, the technicals, and fundamentals, I'd end up with no results every time. Again, just put in the criteria that match what you need. When you're creating your own search for a specific requirement, always click Clear these settings first. Empty everything out from the default search or your previously saved search. So there's nothing hidden there that's causing a conflict with what you're screening for today. Input the settings that apply to you. Select your expiration time frame first. Put in some minimum option liquidity, and then put in the requirement you have. Is it a high dividend paying stock? Are you looking for stocks with a high volatility? Are you looking for stocks with a low volatility, or options with a low volatility for maybe a long strangle or a long straddle? Are you looking just at ETFs? Put in just the 3 or 4 criteria that match your specific search alone, the requirement that you have for this themed search you're using, and then those 1 or 2 stock options there. Again, the expiration time frame, some basic liquidity, basic return if you're doing a covered call, for example. And then after you've put in those 3 or 4 or 5 criteria, hit submit. If you have too many results, then you can start filtering it down more. If you end up with only 5 results or 1 result, as we did with a high dividend, we might want to open the search up a little bit more. Okay. And then, of course, when screening for the ETFs, we walk through deselecting the inverse and leverage ETFs, how you can do that. And when screening for dividends paying stocks, you probably want to leave the lists open as well. All right. Stephen asked a question, is there a way to reset the default criteria after you've made changes? Absolutely. Let's start off with the high dividend covered call screen that we saved. So the search remembered which last save search I was using, whether it was my personal save search or the PowerOptions default. At any time, underneath the listed trades in the search setting saved as field, Steve, I can go back to any of the default PowerOptions criteria. And if I started with a different one, let's say I started with the in the money covered call screen, and we scroll down here, then I made some changes. Now there's only 26, but if I made some changes to this search and then saved it as my own, at any time I could go back to the default in the money PowerOptions screen, the out of the money screen, the weekly covered call search, and more. You cannot delete the PowerOptions default searches. They're always there for you to go back to as a touchstone or to use as a stepping stone to create your new personal search. But you can save as many adjusted or searches from scratch that you want to, and you can then delete them at any time once you pull them up. Okay? So you always have the ability to go back to the default screens or the sample searches underneath the main tab as well. Okay, so I just wanted to remind everyone, if you're currently on your trial, or if you are currently not on a PowerOptions trial, I should start that way. If you haven't taken a trial recently, remember, go to powerop.com, and all you have to do is put in your name and email address and click Start My Trial. You get access to these tools for 14 days. At the end of your trial, or if you're just coming back to PowerOptions, our subscription services are we offer an end-of-day data service now. It still gives you access to all of the search, all of the research and analysis tools, the portfolio tools, but it's just using end-of-day data. It's only updated once per day at around 4:10, 4:15 p.m. Eastern Time, and that's only $40 per month. We still offer our 20-minute delayed service, so every time you run a search or you view your portfolio, for example, you're seeing the numbers and the calculations that are updated about every 15 minutes or so, and that's $60 per month. And then, of course, we do offer the real-time service, so every time you submit a page or refresh a page, you're getting the numbers and calculations at that very instant, and that's only $100 per month. We do offer a historical suite of tools. If you're interested in that, you can check out the webinar there under the PowerOptions Tools tab for the historical suite of tools. Allows you to do some back testing You can view historical option chains as well. That's an additional cost of $40 to either the 20-minute delayed. So the 20-minute delayed with historical would be $100 per month, and the real-time with historical would be $140 per month. Now, Steve says thank you for the webinar. Michael says thank you. Great presentation. Thank you very much. I hope you all enjoyed this presentation. If you think of any questions later on, remember you can send us an email at any time to support@powerop.com. I'll help you with any ideas you might have of how to create your own personal search, for example, based on what you're looking for in a given strategy. Or I might point you also to one or two webinars that might better enhance your education in that strategy and using the tools to implement that strategy as well. If you happen to have questions about the radioactive trading concepts, we didn't really touch on that today, you can always send us an email to support@radioactivetrading.com or PowerOptions, doesn't really matter. We're also available during market hours. If you live inside the U.S., you can call us during market hours at 877-992-7971. And if you live outside the U.S., you can reach us at 302-992-7971. And of course, contact links are at the bottom of every PowerOptions page.